Welcome to Module 2, MAGI Methodology. In this presentation, we will cover the following topics: MAGI Introduction, Point-in-Time Methodology, Income from a Job, Self-Employment Income, Unearned Income, Foreign Income, Non-Countable Income, Educational Income, American Indian and Alaska Native Income, Lump Sums, Income of tax-dependent or children 18 or younger, Deductions, and Resources. MAGI Introduction. Modified Adjusted Gross Income, MAGI, is how income is calculated for MAGI-based Washington Apple Health Medicaid and Children's Health Insurance Program CHIP, Apple Health for Kids with Premiums programs. Generally, the MAGI calculation is an individual's adjusted gross income, AGI, as determined by the Internal Revenue Code, IRC, with a few modifications. What is the definition of adjusted gross income? Adjusted gross income, or AGI, is an individual's total gross taxable income minus allowable deductions. This amount is reported on line 37 of the IRS Form 1040. What makes AGI MAGI? MAGI includes interest, Social Security and Railroad Retirement, and foreign income in addition to adjusted gross income. These income types will be reviewed later in this presentation. With a few exceptions, MAGI does not include educational income, American Indian Alaska Native income, lump sums, and income of tax dependents and children age 18 and younger. These income types will be reviewed later in this presentation. Part of the AGI calculation includes deductions from gross income. We will discuss deductions in depth later in this training. Countable MAGI income is reduced by an amount equal to 5 percentage points of the federal poverty level, FPL, based on household size to determine net income. Here is the MAGI calculation. Total MAGI income is countable income minus allowable IRS deductions minus the 5% FPL disregard. Point-in-time methodology. Point-in-time means that income that is received or is likely to be received in the month in which the person submits an application or renewal for Washington Apple Health, or the month in which the agency completes a redetermination of coverage with the following provisions. The following calculations are used to calculate a monthly income for individuals paid more than once a month. When individuals are paid weekly, multiply their expected income by 4.3. When individuals are paid every other week, multiply their expected income by 2.15. For individuals paid less than once a month, individuals can use an average to calculate monthly income. A good example of this type of income is self-employment. When the income varies seasonally, an individual can choose to average or use point-in-time methodology when reporting income. For example, an individual works as a fisherman seasonally during summers, and during the rest of the year his family lives off this income. In this case, it might be in the best interest to take an average of income over the year to determine this client's eligibility, or if it is more beneficial to the individual, he can choose a point-in-time calculation stating zero income during the months that he is not working and report his earnings during the summer months. Now let's review income from a job. What is income from a job? Income from a job is income that is received from working and may include wages, salaries, tips, commissions, and bonuses. Wages and salaries also include sick pay, annual leave, and severance pay. Mileage reimbursement or similar non-taxable reimbursements are not included. Income from a job is reported on line 7 of the IRS Form 1040. Now let's review self-employment income. What is self-employment income? Self-employment income is income that is earned by a person from running a business, performing a service, selling items that are made, or reselling items with the intent to make a profit. This income can be earned if the person is carrying on a trade, in business as a sole proprietor or an independent contractor, a member of a partnership that carries on a business, or in business for themselves other than listed above. Self-employment income is determined using an individual's most recent federal tax return or their most recent 3-month profit and loss statement. Under MAGI, net self-employment income, which is gross income minus allowable business expenses, is used to determine eligibility for MAGI-based Apple Health programs. Let's look at the types of self-employment income that you may come across. They include, but are not limited to, babysit part-time, drive for Uber or Lyft, rent out a room of their home, resell items on eBay, own their own daycare, partner in a medical practice, shareholders in their own corporation. In the following slides, we will review in detail the different types of business structures that are reported as self-employment income. Sole proprietorship. This type of business is simple to form and operate. The individual is the sole owner of this business. The business owner is personally liable for all debts incurred by the business. This is the most common business structure, and sole proprietorships offer a large array of business types. Sole proprietors file a Schedule C and report their net income on line 12 of the Standard 1040. Some limited liability companies, LLCs, and individuals who receive royalties from copyrights or patents will choose to file taxes like a sole proprietor. Common examples include Uber and Lyft drivers, bookkeepers, real estate agents, shopkeepers, private contractors, translators, truck drivers, insurance agents, taxi drivers, Sensi and Mary Kay distributors, child care providers, non-charitable GoFundMe accounts, etc. Keep in mind that some sole proprietors may not file a tax return as they provide part-time or infrequent services. These may include babysitters, handymen, landscapers, or house cleaners. Business income or loss for sole proprietorship is reported on line 12 of the IRS Form 1040. Partnership. Partnership income is income that is received from a business when a relationship exists between two or more persons who join to carry on a trade or business. Each person contributes money, property, labor, or skill and expects to share in the profits and loss of the business. These types of partnerships can include general limited, limited liability LLP, and limited liability limited LLLP. The partnership itself is required to file a tax return and pass any losses and gains to its partners. The partnership business will file its own tax return on IRS Form 1060, U.S. Return of Partnership Income, and Schedule K1, Form 1065, are distributed to each business partner. Income for each individual partner is reported on their personal tax return on line 17 of the IRS Form 1040. Gains and losses from partnerships are also reported on page 2 of IRS Schedule E, Form 1040, of an individual's personal tax return. Some common examples of partnerships include real estate businesses, dance studios, medical and legal practices, marketing firms, small retail stores, etc. Partnership income or loss is reported on line 17 of the IRS Form 1040. Corporation. Corporations have a more complex business structure. Shareholders or owners of the corporation are employees of the corporation and receive wages and additional income from the corporation. Any debts incurred by the business are liable to the corporation and not the shareholders. Types of corporations can be C corporations, S corporations, nonprofit, and some limited liability companies, LLCs, can be treated like a corporation for tax filing purposes. Shareholders of the corporation are essentially employees of the corporation and can be paid wages and dividends from the corporation. A corporation is required to file a federal tax return depending on what kind of corporation it is. IRS Form 1120-S, U.S. Income Tax Return for an S corporation, or 1120 Form U.S. Corporation Income Tax Return. Shareholders of an S corporation will receive a Schedule K-1, Form 1120-S, indicating their yearly dividend amounts received and their percentage amount in the partnership. Any dividends received from the corporation will be reported on line 17 of IRS Form 1040. Gains and losses received from the corporation in the form of dividends are also reported on page 2 of IRS Schedule E, Form 1040 of an individual's personal tax return. Like any wages earned, any individual employed by a corporation will receive wage stubs or an IRS Form W-2. Wages are reported on line 7 of IRS Form 1040. Some common examples, especially for Apple Health recipients, are S corporations and include gas stations, general stores, real estate businesses, insurance agencies, chiropractors, dentists, etc. Corporation income is reported on line 17 of the IRS Form 1040. As a reminder, an individual could also receive wages from the corporation, and they are reported on line 7 of the IRS Form 1040. Rental. Rental income is income in the form of payments or services received from the use or occupation of real estate or personal property. Rental income is considered earned once you have received it and not when it was earned. Security deposits are not considered income unless they are not returned to the tenant, and any expenses paid by the tenant are also considered income. Not all individuals who have rental income are required to file a tax return. Some examples of rental income can include renting out a home of your house, leasing part of your property as storage, having numerous rentals, etc. Rental income is filed on a Schedule E of the tax return and reported on line 17 of the Standard 1040. Some forms of royalty income are also reported similar to rental income on the same form. Farming. Farming income is income received by an individual from cultivating, operating, or managing a farm for gain or profit. This can include income from operating a stock, dairy, poultry, fish, fruit, or truck farm, and operating a plantation, ranch orchard, or grove. It can also include income from the sale of crop shares if the individual materially participates in producing the crop. Individuals who have farming income are not required to file a tax return. Farming income is filed on Schedule F and reported on line 18 of the Standard 1040 tax return. Income reported on line 18 will not include income received from tribal activities, as this is not taxable income. Now let's review unearned income. What is unearned income? Unearned income is income received from a source other than employment. Some common examples include Title II Social Security benefits, unemployment compensation, interest income, pensions, annuities, and IRAs, dividends, military retirement, and alimony. What are Social Security benefits? Social Security benefits are payments administered by the Social Security Administration, SSA, based on age, survivor status, and disability. Some benefits administered under Title II are exempt from tax. Under MAGI, however, any amount of Social Security benefits received under Title II are used to determine eligibility. Countable Social Security benefits under Title II include retirement benefits, disability benefits, SSDI, dependent benefits, survivor benefits. SSDI versus SSI. Sometimes there is confusion between SSDI, Title II, and Supplemental Security Income, or SSI, Title 16, disability payments from SSA. SSI is non-countable under MAGI. Individuals who are eligible for SSDI can be eligible for MAGI coverage during the 2 years before they become Medicare eligible. They also may have children or spouses eligible for MAGI coverage. Take a moment to review this slide. Additional differences between SSDI countable income and SSI non-countable income are displayed in the table. Social Security benefits are reported on line 20A of the IRS Form 1040, and the taxable amount is reported on line 20B of the IRS Form 1040. As a reminder, under MAGI methodology, all Title II Social Security benefits are countable. Dividends. What are dividends? Dividends are distributions of property or income an individual receives for owning stock in a corporation or interest in a partnership, an estate, a trust, an S corporation, or an association that is taxable as a corporation. Keep in mind that dividends are taxable income and countable for MAGI eligibility. Take a moment to review this slide. Qualified dividends are listed separately on the tax form and are included in line 9A. What are pensions, annuities, and IRAs? Pensions, annuities, and individual retirement accounts, IRAs, are typically fixed sums of money that are paid to individuals for the rest of their life, whether invested by the individuals themselves, their employer, or a combination of both. Generally, these income types are taxable and countable for MAGI eligibility. However, there are some exceptions. The rules around these exceptions are complicated and depend on the individual's specific circumstances. IRA distributions can be found on line 15A and 15B. Pensions and annuities can be found on line 16A and 16B of the IRS Form 1040. For determining income eligibility for MAGI-based programs, we would count anything that is listed in box 15B and 16B depending on the income. Capital gains and losses. What are capital gains and losses? The financial gain or loss from the sale or exchange of a capital asset. A capital asset includes property such as your home or car, as well as an investment property such as stocks and bonds. Some examples of countable capital gains and losses are sale of assets for a business that is still operating, sale of houses for individuals who have numerous rentals, sale of stocks, shares, or other investments. Some examples of non-countable capital gains and losses are sale of assets for a business that is no longer operating, one-time sale of house or property. Capital gains and losses can be found on line 13 of the IRS Form 1040. Interest income. What is interest income? Interest is income earned from investments that pay interest, such as savings accounts, money market accounts, or certificates of deposit. Whether interest income is taxable or not, for the purposes of determining MAGI eligibility, all interest income received or accrued is countable. Amounts that are non-taxable are listed separately on the IRS Form 1040. For determining income eligibility for MAGI-based programs, we would count anything that is listed in box 8A and 8B depending on the income. Alimony income. What is alimony income? Alimony is income received from a spouse or former spouse under a divorce decree or separation instrument. It does not include voluntary payments or child support payments. Alimony can also be called spousal maintenance or spousal support in decree or court order. Alimony is a tax deduction which will be discussed later in this training. Alimony income can be found on line 11 of the IRS Form 1040. Unemployment compensation. What is unemployment compensation? Unemployment compensation is income received under the compensation laws of the United States or a state, such as state unemployment insurance benefits, or benefits paid to an individual by a state or by the District of Columbia from the Federal Unemployment Trust Fund. Unemployment compensation can be found on line 19 of the IRS Form 1040. There are many other sources of other taxable income. Here are some of the more common examples: per capita income, net operating loss, gambling, lottery or raffle winnings, jury duty pay, rewards including Nobel, Pulitzer, or other prize, strike or lockout benefits, whistleblowers award. This type of income will be listed on line 21 of the IRS Form 1040. Foreign income. All foreign money received is converted into US dollars using the latest exchange rate. Some examples can include Canadian pension, earned income from a Chinese company, dividends from Macau shares, or rental income from property in Russia. Non-countable income. Non-countable income is not asked for or collected in Washington Health Plan Finder during the application process. Some examples may include veterans' disability and educational benefits, non-taxable time loss benefits or L&I benefits, child support payments, gifts or inheritances, or SSI. Educational income. Income from educational assistance programs used for educational purposes is not countable. Educational benefits such as scholarships, awards, or fellowship grants used for educational purposes are not countable income when determining MAGI eligibility. American Indian Alaska Native. For the purposes of determining MAGI eligibility for Apple Health, certain types of income that American Indian Alaska Native individuals receive is not countable. Take a moment to review this slide. As you can see, earned income that is related to the exercise of treaty rights is not countable, but it may be reported to the Employment Security Department. Through the application process in Washington Health Plan Finder, only per capita distributions are reported as income. Lump sums. What is a lump sum? A lump sum is a one-time payment received, and payments are not anticipated to be received again or on a continuing basis. Lump sums are only countable income if they are a countable source of income and received in the month of application. Lump sums are a difficult concept. Let's walk through some scenarios together. Scenario 1. Josephina applies for coverage in February and receives $12,000 in March from a job fishing in Alaska. She fishes twice a year. Is this countable income? Yes, this is countable earned income. This is not a lump sum since it is not received just once but ongoing. Scenario 2. Maria applies for coverage in July. She sells her home in July and receives a capital gain of $10,000. This is Maria's only home, and she does not anticipate any more home sales in the near future. Is this countable income? Yes, this is countable income for the month of application only. This lump sum would not be countable ongoing. Income of tax dependents or children age 18 or younger. Income of tax dependents or children age 18 or younger is only countable when it meets the tax filing threshold required for a single tax filer. This rule applies regardless if the individual expects to file a federal tax return or not. Here are the 2017 tax filing threshold requirements. As you can see, there are different limits for earned and unearned income. Keep in mind, Social Security income is never counted for tax dependents or children age 18 or younger because the tax filing threshold for it is so high. Deductions. What are deductions? Deductions are adjustments the IRS allows when calculating an individual's adjusted gross income. These deductions are allowed following the same IRS rules and limits when determining eligibility for MAGI-based Apple Health programs. Some deductions have yearly limits, and some deductions are variable. Deductions are annualized through an individual certification period. Apple Health is renewed throughout the year and not during taxable years. It is the individual's responsibility, if there is a change through the taxable year of a deduction, to report it throughout the year. Deductions are listed on lines 23 through 35 of the standard IRS Form 1040. On the preceding slides, we will give a brief overview of each of the allowable deductions, starting with the most common we see with the Apple Health eligibility. Educational expenses. This deduction is for tuition and tuition-based fees to an eligible post-secondary educational institution for the individual, their spouse, or their tax dependents for tax filers, or their children in the household for non-filers. It does not include living expenses, activity fees, personal expenses, and tuition paid by scholarships, grants, or other financial aid, not including loans. Currently, the maximum amount for education expenses is $4,000 per year. Student loan interest. This deduction is for interest paid on student loans. Loans must have been used for qualifying educational expenses while attending an educational institution. Principal payments are not deductible. The loan payments must be for the individual, their spouse, or their tax dependents for tax filers, or their children in the household for non-filers. Currently, the maximum amount for student loan interest is $2,500 per year. Moving expenses. This deduction is for moving expenses for individuals who are moving for a job. The job must be located more than 50 miles away, and the individual must be employed for at least 39 weeks during the first 12 months after the move, 72 weeks if self-employed. This does not include meals, but can include actual packing and transporting of household goods and travel expenses for each household member. Currently, the deduction amount for moving expenses is variable. Spousal support. This deduction is for court-ordered spousal support or alimony. It does not include voluntary alimony payments or child support payments. Currently, the deduction amount for alimony is variable. Health savings account. This deduction is for contributions made to a pre-tax or tax-deductible health savings account designated for medical-related expenses. Currently, the maximum deduction for health savings account depends on a number of factors including age. Pre-tax retirement account. This deduction is for contributions made to a pre-tax retirement account and excludes both Roth IRA and simple IRA contributions. Currently, the maximum deduction for pre-tax retirement account depends on age. This amount increases for those who are age 50 and older. Self-employment tax. This deduction is for tax paid to the federal government to fund Medicare and Social Security for self-employed individuals who net more than $400 per year, or employees of churches or church organizations with income of more than $108.28 per year. Currently, the deduction amount for self-employment tax is variable. Self-employment retirement plan. This deduction is for contributions made to a self-employment retirement plan, including SEP, simple, or qualified plan. Currently, the deduction amount for self-employment retirement plan is variable. Self-employment health insurance. This deduction is for contributions made to self-employment health insurance plans. Currently, the deduction amount for self-employment health insurance is variable. Educator expenses. This deduction is for expenses for unreimbursed education expenses. Example, books, supplies, and other equipment. The individual must be a licensed educator. Currently, the maximum amount for educator expenses is $250 per year. Domestic production activities. This deduction is for individuals and businesses that produce goods and services in the United States. This can be from self-employment, estates, or trusts. Currently, the deduction amount for domestic production activities is variable. Penalty on early withdrawal of savings. This deduction is for a penalty on withdrawal of funds from a certificate of deposit or other deferred interest account before maturity. Currently, the deduction amount for penalty on early withdrawal of savings is variable. Certain claimable business expenses of U.S. reservist, performing artists, and fee-based government officials. This deduction is for U.S. reservists, performing artists, or fee-based government employees who have expenses necessary for their job, including travel of more than 100 miles. The maximum amount for this deduction is variable. Resources. For more resources and training materials regarding Apple Health Medicaid, please visit the Healthcare Authority Training and Education page at the link shown on this slide. For community partners, Healthcare Authority has made available a team of eligibility policy representatives to provide assistance for questions regarding Medicaid eligibility and assistance with Washington Apple Health applications. These representatives serve specific counties. For more information about the Washington Volunteer Assister Program, please email hca volunteerassister@hca.wa.gov. Congratulations! You have completed Module 2 of the HCA Community-Based Training. Please continue on to Module 3 of the 7-module HCA Community-Based Training.